It's a very obedient panel straight up here. That's wonderful. So joining Anna on stage is Peter King, Chief Executive of Westpac, and Marnie Baker, the MD of Bendigo and Adelaide Bank. Welcome to all. And if you would like to look at your app and throw in some questions, I'd be delighted to put some of them as we go through to the panel. Now, perhaps, Peter, I could start with you, and just going back to the Governor's speech, I wondered how you interpret this sort of recent shift in words. The Governor's now talking very much about a rate rise being plausible this year. How do you interpret that, and what is Westpac's view of when a rate rise is likely?
Yeah, well, I think, as the Governor said, we've moved from an easing cycle to a tightening cycle. Certainly from the bank's perspective, it's interesting. It could be June, it could be August. Our economics team thinks August as the most likely. But probably we're spending more time on what's the cycle look like than we are about when's the first move. And so our economist thinks 1 3/4 as the top of the cycle. I've certainly heard other market participants talk about 2%, and then the market itself is pricing in something over 2%. The most interesting thing about that is it's very low. So if we're going from a 10 basis point up to a 2% cycle, that's something that we actually have to think about, how you run your organisations, how you run a bank. There's not a lot of flexibility if something goes wrong for the Reserve Bank now, because we're so low. And so we're spending more time on that issue than necessarily on when does it start. And
so for borrowers, for some borrowers who are reasonably leveraged, a jump of 0.1 to 2 is very different from a jump of 15 to 17%, say in the 90s. Isn't it? How much extra pressure is this going to bring out there
Well, certainly for a lot of borrowers, they haven't experienced a rate rise, but when we were assessing loans, we had a buffer. And I think that's lost in the debate sometimes, that we weren't lending at we weren't assessing at the rate that the customer was paying, we were assuming a much higher rate. Now, what that means is they may have had extra income to do other things because rates ended up being a bit lower. But as the Governor said, a lot of them used the cash to get ahead. So they've gone from the 1 to 2 years. So yes. I think we should reflect on the fact that we did assess using buffers. Yes. People have got ahead, and so there's flexibility in the system.
Yes, Marnie, do you agree? What's your take on where rates are going to go?
Yeah, I think our view's very consistent with Peter, and I think the market in general, that we will see a rate rise before the end of this calendar year. And, whether it's 1 3/4 or 2%, but I think that range between 0 and 2% is where we're probably going to be sitting for some time now. And it is very different. When I started in banking, we're up around the 17% interest rates, and it's quite remarkable now to think just how low rates are, and that they will stay low, still comparably low for quite some time.
But you don't see, a real concern about the pain of going from that 0.1 to 2 for some borrowers?
Peter, said it before. When you actually do assess each individual loan, you do apply a certain buffer in relation to that to ensure that people don't get into difficulty and don't get into that.
So you're reasonably comfortable with that?
Yeah, and the Reserve Bank Governor said it before too, around the, people are ahead in their repayments. I know within our own organisation, 43% of our borrowers are ahead of repayments by 12 months and 33% by 2 years.
I will note though.
Yes, go on, Anna, yes.
Well, I think the Governor made a good point this morning. It's 11 years and since there's been a rise, so there is a lot of people out there who've never experienced it and may never have kind of thought about needing to plan for it. And I think he's the master of the understatement when he said for those borrowers, it will be an unwelcome development. Yeah. I don't think anybody's under any illusions. No one likes to pay more for anything. And it will be something that people won't be happy about.
We do focus a lot, though, on the borrowers.
Yes.
And it was a brief comment that the Reserve Bank Governor made, but it's very true. There's a lot of, our customers and depositors who are very reliant on income from their bank deposits that are going to welcome an increase in rates.
Look, another, Marnie, a very unwelcome, horrible event that's happened for some Australians has been this flood. Now, you must have customers who've been affected. How are you seeing the situation, and what are you able to do for customers?
Unfortunately, it's all too familiar. These scenarios, if you think back in time, natural disasters is something that we've dealt with here in Australia. It's a part of what we deal with ongoing. The frequency of those is quite scary, as you see it now. But banking, banks have become very proactive in response in relation to providing support for our customers who do find themselves in difficulty and are able to jump into action very quickly. So, by way of support in relation to, waiving of fees or just extending their ability to make repayments, etc. But there's many mechanisms now that all of the banks put in place. I myself are really sort of concerned that we focus very much on the here and now. And these type of life-changing events for people have a very long tail. And so it's years down the track when the spotlight has gone off that particular event, when the front page, it's not on the front page anymore, and those communities are still rebuilding.
Yes.
And it's not only the physical rebuilding and the infrastructure, but it's also the mental health impact. Like I said, because this is traumatic. And I know Anna will be nodding here because she's lived
Well,
that,
Anna, yes. I mean, you as Premier, you had to deal with those horrific floods in Queensland. What lesson has came out of that for you, and what do you think perhaps needs to be done now that isn't being done in New South Wales?
Look, I think what is changing is the speed at which these events are now occurring, or the regularity with which they're occurring. I heard the Deputy Premier of Queensland on radio yesterday saying, since the 2011 flood, Queensland has had 90 natural disasters declared. Now, some of those would have been quite small, or in the sense they're affecting a very small geographic area, but others have been huge. Bushfires, they've had cyclones, they've had a couple of other very major floods in big regional centres. And so it's becoming almost business as usual. And that means we've got to think differently about how we manage and plan for them. I think there's a lot of people in northern New South Wales, particularly around Lismore. Everybody knows that Lismore floods, and it floods over and over and over again. And I think we've really got to ask ourselves, and I don't put this at the feet of the current government any more than the one before it or the one before it. Where is the investment in mitigation? The Insurance Council will tell you that for every dollar spent on a natural disaster, 97 cents of it is on the immediate recovery.
So we need new policy on this.
3 cents in the dollar on avoidance and mitigation. So, if you think about what would it look like if you flipped that, and if you think about some of the jurisdictions globally, like the Netherlands, and how they've completely rethought how they build houses and where they build them, then there's some big public policy questions. Many of the people who experienced this flood in the last couple of weeks, I just think about Brisbane and the suburbs in Brisbane that I know very well, and I know how badly those houses, they had to be knocked down and rebuilt. If that's happened to you now, twice in 10 years, I mean, what it really means that those people last week, I don't know what the percentage is, but it will be a big percentage has been knocked off the value of their home.
Yeah.
Than, if they'd put it on the market in January.
Yeah.
And there's going to be a very significant impact on their ability to insure it.
Yeah.
And we're talking thousands and thousands and thousands of
So,
homes.
yes, all right. So, Peter, we've just had both regulators up here. I mean, this is obviously, people are linking these more persistent and pernicious events to climate change. Wayne Byers says he's drowning in stock takes, and he's got his practice guide on climate, the vulnerability assessment on climate. But what about regulators thinking about the energy transition itself, and maybe in relation to capital buffer rules for banks?
Yeah, well, I think on climate, certainly for us, the industry, it's one of our top three, and in terms of priorities, and all the updates on the scientific estimates are it's going faster. And from a banking perspective, it's a risk-reward occasion. We're in the business of managing risk, and this is a risk. It also creates opportunities in the transition. But you're right, one of the big first changes is how do we change electricity production, distribution in the economy. And obviously there's a lot of focus on coal, and we can see most of the bank's policies are about not funding thermal coal past 2030, so I think that's clear. The firming fuel of gas, I think, is a bit of a debate, how long we need it. It's a speed question, and so we need to make sure that works.
But before we get to
policy is probably the thing that we need.
What about down at a household level, if you're lending to houses?
Yeah, and then we've got, if you think about other sectors, transport,
Yes.
agriculture, and then those parts of the community that will be impacted by more severe storms, whether it be fires, floods, or just storms. So I think we will need to invest in the quality of housing, in mitigation, whether it be flood or a fire, and that's where we need policy. So we as an industry, as our community, need to do more thinking on what it means, because we don't want disconnects in the market that's solved in the wrong way.
Yeah, Marnie, I mean, what we're talking about here obviously is giving financiers a nudge in terms of who they do and who they don't finance, in a way to encourage change.
Yeah, and banks can look at it in many different ways, but if you think about it from a risk-based perspective, I mean, you can incentivise borrowers to, through home loans, to perhaps put solar, on their roofs, etc. Actually, this month is our 20-year anniversary from the first green loan we introduced within our own organisation, and in fact, we do price accordingly, that loan to encourage people to think more about their own sort of carbon footprint. But we also do have to be careful, and whether it's the floods and insurance or it's banking products per se, is we have to be careful not to price also people out of their communities as well. Yeah. So there's a fine balance there.
For sure. Anna, Peter mentioned there this tension, and I think it is a new tension now. We were all very much going in the sort of hard, ears pinned back carbon emissions direction, but obviously this tightening of the gas market, and even before Ukraine, the issues in Europe were sort of suggesting that gas is becoming more and more important. We've got coal being opened up again in parts of Europe. How do you see the bank attitude to financing of gas in particular now?
Well, I know it's an issue that for those banks that have exposure in lending into gas, it's an issue that is, as we speak, occupying a lot of discussion within their senior teams and within their boards. We have one major bank who's publicly made a commitment around oil and gas, and they're saying, transitioning out by 2050. And the same bank is transitioning out of thermal coal mining by 2030. So they're obviously seeing a very different role for those parts of the energy sector.
But we recently had a global directive saying no one is to invest in new gas. And now we've got sanctions, and Russia's exports of gas are just not going to be there. Does this change the game?
I think it likely changes the game in the short term, but I do think that and maybe Peter and Marnie are best placed to answer this more fully, but I would expect that the way boards and senior teams are looking at this is, where do we need to be by 2030, 2040, 2050? And we can't know what's going to happen to war in Europe.
I would say the trend is clear. Money's going into sustainable energy generation, and it's only going to go faster. So that's the big move. And then we have, I think the word we need to focus on is transition. So there will be a period of transition from coal to sustainable sources. That's the question about how fast. But I think gas will have a role to play, and we'll see how quick it goes.
Including new gas?
Well, we'll see. I think the market will sort out. This is a big price increase. Demand probably comes down because it's too expensive, so the market sorts it out. We've just got an immediate, pretty big market disruption at the moment that's being covered in a short-term way.
All right. Marnie, let me move to inflationary pressures on the ground. What are you seeing out there? How are you managing them? Are you seeing the creep in wages happening out there?
Well, most definitely, the Reserve Bank Governor again. I think he covered off everything, didn't he, this morning? all the topics. But definitely in banking, definitely I think in professional services, you are seeing very much wage inflation, and you know, particularly around certain skills, technology. Everyone's transforming their businesses from a digital perspective, so there's a real draw on those. Risk and compliance resources, a huge draw on those resources too.
So how are you managing that? Because presumably at the same time there's a tightening of the market there.
Yeah, well, I think it's your employee value proposition, isn't it? So, it is broader than the remuneration component, an employee value proposition, and we all bring something different, as corporates and as organisations. So I think it is focusing on the broader picture. So
some bank leaders are calling very strongly for migration, particularly skill migration. Where do you sit on that?
Yeah, it's interesting. I just touched on before around technology and digital resources, and globally digital transformations occurring across all industries, not just financial services. And I think migration, there is some aspect to that. But remember, we can work from anywhere now. So that shouldn't stop us being able to access resources. I think it's a global shortage.
Yeah, and a global shortage.
Yeah, and I think it's something we need to, look at here ourselves in Australia. And are we training the right skills? Have we put the investment into ensuring that we actually have the right skills? We need to be really looking forward and doing that now, because this problem's not going to get any better. I don't believe in that.
So Peter, obviously training and skilling up here, equally a lot of business leaders see bringing in skilled people as seeders for that process is absolutely critical as well. How do you see the importance of migration? And now the borders are open, are people actually going to come?
Well, I think it's both. I think the longer term solution is we need to train more people for the new economy, for the digital economy. And I think you've heard from the different speakers and panellists this morning about how different it is going to be and changing, and so the banks will be part of that. In the short term, we may need more people coming to the country. The borders are open. The feedback I'm getting is it's starting to flow in terms of visa applications, so it's starting to come.
It is starting. Yeah. Okay, let's move to digital, because it is obviously such a big space for banks. Anna, I thought Wayne Byers' comments today on the overall regulatory system, so obviously we'll think about regulating some of these digital areas in the future, but I know you're hopeful that some of the pile-on of regulation after the Royal Commission might actually be rethought. But I thought it was notable that Wayne Byers said the speed of the change of the regulatory system is to be balanced with the cost on industry. What's your response to that?
Well, I agree with him heartily. Well, I think the challenge for government and regulators and for the industry, and it's one of the reasons why we want to keep having these kind of discussions in a very public way, yes, there's all the additional requirements on the industry as a result of recommendations of the Royal Commission, and yes, there is some rapidly accelerating products and behaviours in the market that are now unregulated, and where I think customers are at increasing risk, which do need to be looked at and regulated, not only, for customer protection, but also there are still level playing field issues out there, I think, between banks and some of the newer products that are coming on the market. I think, therefore, the challenge is looking at the whole picture. I don't feel like there's been a really systematic consideration of, okay, if that's all the new and there's more new to come, is what of the old that once made sense maybe doesn't make a lot of sense anymore. And one of the opportunities we have at the moment is through the process with the Australian Law Reform Commission to look at the Corporations Act and to think about how it could be streamlined and simplified. It sounds like an easy thing. As it turns out, simplifying things is enormously complicated. And many of the member banks, they're almost a bit of a groan at the idea that the Corporations Act might, substantially be changed. Not because they think it's great, but it's kind of, everyone thinks a lot of it's very messy and complicated. But it's a messy, complicated thing that they currently know what to do with.
Yes.
And the idea that even if the next one is better and simpler, it's just a whole exercise of new compliance, new training, new systems, new technology, and so.
But you see it as an imperative to actually sort of.
Absolutely, I think we know that there is areas in areas of activity that are unregulated, where we know customers are at risk, and where there are really quite live competition issues, and they do have to be dealt with by regulators and by legislation. But in that process, there's got to be opportunity, and I think there is increasing, at least listening ears on both sides of politics in Canberra. We've got to do some of the exercise of looking at many of the things that banks are still investing in compliance with that actually don't make sense anymore.
All right. Well, Peter, simplifying is complicated. Regulating the new market is also very complicated. And this new, highly contested space of the digital wallet, the digital platform, the ACCC's Rod Sims actually has said this is actually a lot harder to put regulation into practice here to deal with the sort of Apple Pay issue and third-party access. What do you think should be done in that space?
Well, I think the first thing is that the phone is becoming the bank. It's 24/7, and so one of the interesting outcomes is who has the ability to influence the phone, can influence how the system works. And I think that's the heart of the issue that is under the regulation, and certainly for us there's a particular feature of the phone that is controlled singularly by Apple that we think may be beneficial for all participants if there was equal access to it. But the phone will become critical in society and banking. If you talk to any CEO, they're digitising their business. Where's it going to be? Phone, tablet, internet. And so the handset itself is critical. If you control it, you can direct it. So, and that may or may not be the best outcome for the economy and the customer. Time will tell. And so I think for us, we have to continue to, as an industry, upgrade our capabilities to compete and to show why you would want to use the features of the banking system that we have in Australia.
Yeah.
And
but are you confident that
it'll be complicated? I think. I think Phil the governor painted a picture today where you no longer get your banknote out of your pocket. What you do is you open your wallet and you flick it. You flick your payment and some digital cash is exchanged.
Yeah.
That'll be outside credit card rails. That'll be outside FPOS. It'll be on some rails, maybe MPP. But that's a different world.
Yeah.
And I
but
think
are you expecting and hoping for some sort of regulatory action on this area?
I think we should control our financial system. I think we really need to have control of our financial system and payments. But as Rod Sims said, it's hard. This one's hard. So it needs some thought. But we want to control it. We want it to be open access. We want it to be secure, and we need it to be fast.
Marnie, we're all talking about everything going digital, everything on the phone. But I mean, what about people that perhaps might get left behind in this shift to digital? What does the future look like there for them?
We have to be very careful in our, in the transition and in the transformation we do make, because, there will be certain cohorts of our customer bases that won't move as quickly to the new economy, nor do they want to either, and we have to respect that choice and that decision for our customers. So we are in this straddling, a couple of worlds at the moment. But it was really heartening through COVID. I know the conversations we had in our own organisation, and also with some of our elderly customers who were on passbooks, still use cheques, etc. And when they got into a situation from a health perspective where they didn't want to actually be coming into a branch, all of a sudden, these customers didn't have access to their banking. And so we spent time educating those customers. And, some of the stories you hear of people who, there was no way I was ever going to, do internet banking. There was no way, I don't know how to use a card.
So this is obviously a very important part of Bendigo and Adelaide, its culture, its brand. It's also quite expensive, to have that sort of face-to-face.
Yeah, and ultimately who pays for that is the customer. So there is an impetus.
So how do you make sure they don't get left behind because they have to,
I think education. I think education is really key to that. Like I said, people are scared to try new things, or they don't want to look silly, or they don't have anyone to assist them from a technology. That's where, as banks, we can step in and play that role, to help to educate our customers, provide them with different ways of being able to do their banking. And the surprising bit is the vast majority of times our customers really embrace that.
Yeah. Is there a plan, Anna, from the government side for digitisation? Do you see a plan? What do you need? What do you want to see more of?
Well, I think in adding to Marnie's comments, I think what we're in the middle of an interregnum, between the old and the new.
Yes.
And it's always a really uncomfortable place, and there's always people who find it harder than others. And actually managing to support those people through that period is a challenge, I think, for every bank, regardless of their size and shape. I do think what is not well understood is that banks still have a very large branch footprint. It's not as big as it once was, and the branches don't look the same as they once did. They're smaller in size. They're much more, in some places, taking 2 or 3 branches off, different suburbs in the high street and putting them all in the Westfield shopping centre where most people are, and all of that sort of, movement. But Australia's banks, in fact, 80 financial institutions pay Australia Post to deliver these services face to face. The basic sort of things that people who might be at risk of being left behind want to do. Cash a cheque, get money out, deposit money, even use their passbook account. And that, I think, is going to be part of the landscape for quite a long time.
Right.
And I would just say, during the pandemic, there were, across all of banks, 500,000 customers in Australia still use a passbook, and we sent every single one of them. We needed ACCC approval to send them unsolicited a card to say, if you need this, and here's a number you can ring. Now, nobody expected that 500,000 people would shift, but 20% of them did. That's a big chunk. Not mindful that many of the people in that group, are often, perhaps in situations like nursing homes where they might not be using many banking services at all. Someone's helping them do it. Yes. So, 20% was a big shift, 100,000 people who'd never done it. had a passbook.
All right. Any questions? Do use the app, please. Just a reminder. Now, Peter, the other space, I suppose, this whole idea of the merchant fee model for credit really being hacked at through things like buy now, pay later, for example. Again, that's not regulated at the moment. Do you see buy now, pay later becoming part of the Credit Act? Should it be?
Oh, well, two issues there. There's the extension of credit, and certainly there's the responsible lending laws and then the product distribution laws. So there's ability there for consideration of extension of credit. In relation to payments, I think when I talk around the world, the financial institution executive look at Australia and think that we have a really good payment system. The cost of it's been reduced over time, in part because of the work the Reserve Bank's done on the cost of payments. But you're right, there's certain new types of payments. Buy now, pay later is an example that it's not captured by the payments regulations at the moment, but I think that'll change.
Yeah, because at the moment, if you're lending to someone, you don't have any sight on how much buy now, pay later, whether they might have 1, 2 or 3 buy now, pay laters.
Yeah, I think it's important. It's important that the economy has one central view of indebtedness, whether that be just, we're very focused on buy now, pay later in this discussion, but I think we've got to step back and say we need a central repository of indebtedness so that we are doing appropriate checks when we lend. So anything that we can do to improve that is good for the customer.
If you take it up a layer, consumers deserve to have protection, and they deserve innovation and competition.
Yep.
And so regardless of what the product is, regardless of where it is in the industry, in a bank or outside of the banking industry, that level playing field needs to be there for the benefit of consumers.
Yeah. Peter, just would love to ask you as well about scams and cyber. How bad is that getting with customers, and what are you doing to help them?
Yeah, so I think in the digital world, one of the questions you asked before about where as a country do we need to improve, digital ID. So one of the things that will underpin a digital economy is knowing who you are.
Yes.
And so we need to do more work on digital ID. In terms of frauds and scams, they are more sophisticated, they are becoming more prevalent, and they're a big issue. One of the capabilities we already have is pay to mobile for consumers, where in the MPP, but we call it Pay ID, but probably better pay to mobile. So when people put in a mobile number in internet banking, they can check the name of the bank account. Yeah. You can't do that in the old direct entry system that we've run. So one of the things is just pushing, all this room, we need to encourage customers to migrate to pay to mobile, pay to email, or what we call Pay ID. Yeah. It's much safer for people. So okay. That's already there. And then we as an industry will need to keep testing the balance between what do we block? What do we just straight out block? What do we message people on to say, do you really want to do this? But in the end, we can't stop people making decisions that aren't great. So.
And you, Peter, now have taken on the chair of the ABA, which is, a role where you are speaking with the government and other players on behalf of the industry with Anna. I wanted to ask you a general one about culture and banks now having come through the Royal Commission. We've got the cycle starting all over again with interest rates. How do you make sure that the banks don't slip back? I mean, obviously Westpac itself has got, AusTrack and a First Strike and everything else, but how do you make sure that banks don't slip back to the old ways?
So I think the starting point is why do we exist as an organisation? We exist to help customers and the community. So you've got to anchor it back to purpose. How then do you do that? Well, I think we've got to simplify our businesses, make things transparent, and always test. One of the good questions or one of the good changes that come out is, the can we, should we test. Maybe we can, should we, and applying that through. But the first thing is, why do you exist? How do you build your business to fulfil the purpose? When you get it wrong, acknowledge it and sort it out quick is the other part of it. But it's about culture, what's important. Most things go really well in the bank. Lots and lots of things go really well every day. Some things don't. You've got to get on them, sort them out. Find them quick, stop them, and then sort it out if you need to sort it out.
Anna, what are you hearing about what's going on in bank boards? Because we hear from some business leaders that ESG is now the core business, but ESG takes an enormous amount of time. Whether it's diversity, harassment, climate change, there are so many other things going on at the moment. What are you hearing about the pressure that is putting on banks doing banking?
I'd say a couple of things. I think certainly what I've heard for the last couple of years is that boards have been spending a lot of time paying attention to issues like culture, that the APRA culture reviews that banks did and their response to it has been something that boards have played a very active role in. And I think, going back to your question to Peter, how do you make sure things don't slip back? I think there's a lot of people in senior positions on all those boards for whom culture is still in the, very much near the top of their agenda. Yes, there's a lot of talk on boards about just how big the ESG agenda is, but I think probably the thing that I hear from them more in terms of, I don't hear them being frustrated so much about the ESG agenda as just that so much of that is now just seen as core business. As Peter's talked about and Marnie's talked about, a lot of it is about risk, and that is core business. But there's still a very big sense that perhaps the amount of time at boards, where boards need to be paying attention to compliance, is bigger than they'd want it to be. Is that fair enough? That's certainly some of the, very aware of the big challenges, and how do we make sure as a board member that we're focused on the big challenges, the big strategy pieces, and still getting through a load of compliance material.
I'd say it's not just core business, it's good business. We shouldn't think of conduct or governance or culture as an adjunct to the conversations that you have. It's got to be embedded in your organisation, in your DNA, and that's good business.
It is good business, but I hear, gosh, the amount of time that is taken up talking about these issues, just as a media person talking, as opposed to talking, in the good old, bad old days, one used to talk about the business. There's far less focus on the actual business, in a relative sense.
And I can understand that, but maybe that's a shift that was required when we talk about, how do you maintain a culture. It's important to be talking about these things. It's important to be keeping it very live, and the board and all through the organisation.
Yeah, Peter, perhaps we're coming towards the end, I know, but a question around stakeholders, not so much the board, but stakeholders, and also who else is in the market now, in the funding market, because used to be the banks, just really the banks, and now you've got both private equity but also industry super. How has that changed the dynamic for funding in Australia?
Well, I think, as we expected, given the creation of the superannuation system, it was going to get big. And it has got big because we're saving and not quite at a point where we've got lots of people drawing down. So that's good. But the time horizon for super's a little bit longer, so they tend to be more the equity investors. Obviously, they do provide by bank RMBS or bank debt as well, shorter nature. But the banking system itself, what does it do? Maturity transformation. We take deposits, we lend them, we manage that maturity risk, we manage the credit risk, and then we've got how we interface with the customers. So the banks, the banking system's got a role. Super's a lot bigger now. I don't think it competes as such. You might see more super lending directly, but I think that's just an evolution of the way that the country saves. So. And a lot of the super funds obviously own significant investments in the banks as well.
Yep.
So our success is important for them. Likewise, it's important for the country.
All right. And Peter, I'll give you the last word on a message that you'd like to leave the audience with as the chair of the ABA now.
Well, I think for us, certainly we're clear that it's about the customer. And if we think about the priorities for this year, we'll be continuing on with COVID support. Hopefully that's not something we come back to, but certainly the events of the floods are big for us. Working out how we help the economy move into the digital world and digitise our banks is a priority for us, and climate. So we feel like the banks have a very important role to play through the ABA to help with these various changes, and they're very important for the country.
Well, as Tom said, it is indeed a very big picture, but I'd like to thank our panel very much for covering a fair amount of it this morning. Thank you. Please join me in thanking our panel.